G'day, Binanceans, and welcome to this week's Binance Beach. As always, I'm your host, Liam, and I'm here to share with you what happened in Aussie crypto this week and what is happening in the crypto markets. Joining me on this week's episode, we have a very experienced crypto and traditional Web2 builder, Darren Rogan. Mate, thanks so much for jumping on the show.
Not a problem. Pleasure to be here, Liam.
So you've got a heap of experience building both in crypto and across a bunch of areas of emerging tech. Let's start with why or how are you a builder and why are you qualified to share crypto builder insights?
Well, I've been like a venture builder most of my career, as well as running consultancy firm and stuff like that. Like I did a startup straight out of university with my professors back a long time ago. I won't say how long ago because then I'll date myself. But I am a big fan of entrepreneurship. I believe that it's the best opportunity for people to build something of value in a digital world, and that was Web2. And I've been in Web2 for over 15 years. Numerous startups raised capital in Australia, in the US, seed, Series A, Series B. I've had some exits. I was also entrepreneur in residence for accelerator programs. I was entrepreneur in residence for UQ, commercializing professors' work, as well as numerous different startups, grant assessors for the government. But I got disillusioned with the walled garden of some of the traditional venture capital inside Web2. And I've also always been a very much a crypto open access believer. And I feel that like the open frontier market has really been Web3. And it allows us to do things with economics at a cost base that's just infeasible in Web2. So I think there's a whole class of problems that are better solved on the blockchain than they are through traditional ventures.
Well, you're currently chair of the investment committee at Vana. You're also a really active community member in the local crypto scene. You've been the custodian of the Gold Coast Blockchain Meetup group now since 2017, I think.
4 or 5 years now.
Yeah.
I can't remember, to be honest.
Yeah. Which is a great group that I've attended a bunch of times and spoken at as well. And you're now working as well on the Oz Builders local building group. Tell us briefly before we get into the weeds, like what's building crypto apps in Australia actually like, and what are the communities that we have here?
Yeah, well, I've actually also been a startup game facilitator for over a decade. So the community stuff started with me like back in Web2 days. Like I believe that the best thing that you can do for your local community is be successful locally. Like I'm Irish originally from Northern Ireland, and I come to Australia and I love Australia. It's a beautiful place, but there's a lot more to Australia than mining. We've got some amazing talent. I've worked with universities doing numerous stuff, including UQ, helped out on some of the bond programs. I think that there's like a talent density of Australia, which is hard to match. Like we punch well above our weight from talented engineers, clever people, and the system that we work in is very skewed towards traditional, mining, housing mechanisms. And I think those opportunities were generational. And I think the newest opportunities are creating businesses, be that a Web2 business or a Web3 business. But I just think global from day one is Web3. Now, if you think about like locally, most cities and towns have a meetup group where you can connect like-minded people, because you need to talk to people who have the same passion and comprehension. Because like there's a good book on customer validation called the MOM test, MOM, and it's done by a guy who went through Y Combinator. And I love it because it's like, don't ask your mum for advice, right? Like, how do you actually ask better questions? Because if you're not talking to people who understand crypto, see its opportunity in this burgeoning global industry, then you're not going to see some of the opportunities that are available for you. I really love the fact that it's almost like what COVID did for work, where it broke that geographical boundary, which means you don't necessarily have to fly over to San Francisco or live in London or live in one of these big centers. You can be in a regional area, do most of your communications online through Zoom. If you're Ethereum, Forecaster, Twitter, and Solana groups, whatever you want to be, but you have like an online community, which is large. And then you can also like tap into a localized community. And if you don't have one, maybe you should consider starting one, would be my point. Because I've been running it for like 4 or 5 years, and I've met some super interesting individuals through that time. I wouldn't say that the meetup itself is like, career building, but you just meet a lot more people, and meeting those people brings with it its own opportunities, meeting like talented individuals who are driven to sort of build and make stuff. I know crypto is like heavily driven by traders, but they need to trade something at the end of the day. And the builders are the foundational blocks of pushing innovation forward. We've got great ideas coming from people. We've got hackathons that are constantly running. Like ETH Sydney was happening. There was a Melbourne Solana hackathon that just happened there very recently. So you don't have to choose the chain that someone else does. You can pick which chain that you want. But there are probably decisions that you want to make, like rational decisions, or you just build out of passion. But just get stuck in. It's much easier than it used to be. And with vibe coding these days, it is even easier.
Well, I mean, the meetup groups, there's a bunch to take away there, but the meetup groups have been massive for my own career, networking and development. You might not know this, but the very first crypto meetup event I went to was one of your Gold Coast Blockchain meetups in Coolangatta. And I think it was, I don't know if it was a pizza day party, and it was right after I joined Binance. Down at Metabar,
might have been a pizza day, might have been an NFT day or something, because NFTs were super hot back then.
Yeah, and it was right after I joined Binance, and that was the first like crypto meetup that I'd been to locally, and that meant that I had this great experience. And I met a heap of awesome people who were working locally on similar things in similar areas, and had similar beliefs in terms of what they're trying to build and how they're trying to change the world. So that was actually huge for my.
Were you surprised how many
people
Were you surprised how many people were actually involved locally or interested? You think you're like in an isolated bubble, and then these people just pop out of nowhere, and then so I feel that is like a great connection, lightning rod to bring people together. So that's why I'm being very passionate about it, because I'm a big fan of growing ecosystems, local ecosystems. Like I was heavily involved in starting the Web2 ecosystem in Brisbane. Through River City Labs. I run the very first event actually in the precinct. And I sort of feel like the economic development of the opportunity for our generations is in our hands, and we have to do it. I don't believe the government is going to help. I think the government's going to continue doing what it does. And it's up to us as a community to come together, support each other while we can, and champion each other's successes. So I'm a big believer in supporting those. And the Oz Builder Group is one that I've started in Brisbane. I'm actually on the Gold Coast, but I travel up to Brisbane to run that one. And that one is like very builder focused, okay? And then some of the others are less builder focused. But it's like a journey, okay? And I think that you join where you want to go, and then you decide which group fits you. And if you don't go to just one meetup, you have to find a vibe that works with you. And not all meetups are the same, and not all sort of as informationally dense. But you don't have to be the expert, just to be clear. You can just be the facilitator, and people will come. So I'm a big believer in community. I'm a big believer in sort of like uncovering these gems. And I've watched a lot of people over the last decade sort of rise up from like unknownness to build very successful companies in Web2 and very successful projects in Web3. How you meet these people is normally serendipitous through these types of events. Like actually, joined Vana by winning like an AI hackathon, and then the judge was like one of the founders. And I said, actually, I love AI, but I'm more of a crypto bro. And he's a bit like, well, actually, I do AI and crypto. We should go have a drink. And so these sorts of hackathon events, meetups, is really how the sort of community starts to come together. And I think that's a special thing.
Yeah, I mean, that's the number one piece of advice I give to people who hit me up and say, hey, how'd you get your job at Binance, and what can I do to get into the industry? I say, go find your local meetup group, go and meet a bunch of people. Even like obviously Binance runs meetups, like a lot of the other community groups, a lot of the other businesses in the space run meetups. So much opportunity for networking and getting your foot in the door through those. How hard is building crypto apps compared to building traditional Web2 businesses?
The big piece is the immutability of smart contracts, right? So in a normal Web2 land, you do what I call building movie world. You're not building a house in the state, you're building the facade, you're showing, and you can change a lot of stuff, right? Because every day I can do a new deployment, deploy out the new feature. In crypto with smart contracts, you have to be a lot more careful about what you do, okay? So it's different in that aspect, but I would say it's even easier today than it's ever been. Okay, so if you're using like a vibe coding tool, most of them have got support for Ethereum, most of them have got support for Rust and Solana. They're the two major chains, and if you're looking for like a career or employment, I would say that you go to the larger chains and do some experimentation. Now, you can tell me what course you've done, but I will ask to see what you've built. All right, and a hobby project just on testnet will go a lot further than me than showing me a TAFE course, for example, right? And it's not that there's nothing wrong with the TAFE course, but I want to see that you've sort of had a little bit of passion, that you're sort of interested in what you can do. And even if you're just doing a basic, ECR20 contract and an NFT contract, it just shows that you get to use that stuff. Like I used to do some guest lecturing at UQ on their CS. And I used to tell people to go get a GitHub account, check some stuff in, and write some unit tests. Because this stuff isn't taught at the university, but that shows to me that you're going to be more applicable in the reality of building stuff rather than just in the theory. And that just raises you up a level compared to everyone else. And I'm not saying that you wouldn't hire one of those people, let me be very clear. But when I have to choose between someone who's got a little side project of a little NFT thing or not, then I'll pick the person who's sort of done one of these projects.
I mean, it demonstrates the ability to solve a real world problem, come up with a business idea and start executing it, right? And that's almost like the 0 to 1. Like everything after that is optimization, learning execution, learning all of the ancillary business functions that need to happen around a core product. But if you can go from 0 to 1, that demonstrates capability.
Not only that, there's a lot more content available now than there ever has been. So on YouTube, for example, there are builders doing great content how to make some stuff. You've got like Nader from Eigenlayer who's doing lots of great content on AI agents. You've got Andy on Solana going through like examples of how to build stuff from scratch. You've got a lot more accessible things that anyone who sort of wants to code a little bit can go. The code is freely available on GitHub to clone, modify, and change. So that barrier is a lot smaller than people understand. Okay, and those small steps, go a long way. And I would also say that in the age of AI coding, vibe coding, you need a lot less. So if you want to create a project, you used to have to like raise a large amount of capital. Like I'm old enough where I used to have to buy servers and rack them and stick things together. And then the cloud came out, right? And we were able to rent this infrastructure, and it reduced that cost of starting and allowed us to create a lot more stuff. Like blockchain allowed global access. Mobile created the ability to know where people are and have GPS and maps and all this. These are like foundational unlocks of capability that you sort of like connect together. And the big thing about blockchain is the ability to like have a product that maybe for like a niche market, but it could be a niche global market. And I think they're the best places for people to start small things and get like a community support. The big part that I love is the fact that you do have tokens. You do have the ability to service a small community. You do have the ability to like raise capital from a global pool. And I'm not against VCs, let me be clear. But at the same time, in Web 2, you can't do what we call a public offering. There are things about how much money you can raise in Australia. In Web 3, it's very different. Now, there are jurisdictional restrictions, but it's easier than ever to create entities in the right jurisdictions if you want to progress this into a larger thing. But you can experiment at home. And now you can like I use like V0, for example, from Vercel, which is a great tool for generating user interfaces. You've got AI image generators. So I used to have a front-end engineer, a designer, a graphical engineer, and that's all sort of collapsing down. So we can almost have what I call small giants now. So you could create the next billion-dollar company sitting with this video playing on one side on YouTube or whichever you're watching it. And on the other side, you could have Claude, Cursor, you could have something else, and you could be vibing out the next product. And I think that mechanism And that sort of support from local ecosystem people to try to give you the advice for success is great. And the big thing about crypto is that, say I help your project and it goes early and I'm an early adopter, I can be rewarded through tokens. So instead of like spending all my money on marketing, I can reward people by issuing tokens, which are then freely tradable on the market. So you can get rewarded for being an early adopter. You can be rewarded by like supporting the project and buying in early, and then it has like market dynamics. Previously, you have to wait to like IPO, and then at an IPO, like I'm still waiting on a project that I've been involved in. It looks like something like 16 years from the point where it started and I'm involved to the point where there'll be a liquidity event, and any of the sort of founding teams or early sort of contributors, as an early contributor, will be able to rationalize the value that they've created in the product. And I think that mechanism allows funds to flow through. And then what you find is like if you look at just Web 2, for example, a lot of early Web 2 people invested in the next crop of Web 2. And you start to see that in Web 3 as well, where the early Web 2 successes start picking projects and founders and start deploying capital. So this is what I mean about how the ecosystem sort of like feeds itself. And with the liquidity in crypto, it sort of like grows faster. And I think that in itself makes it very appealing. There are certain projects that I don't think need Web3. Not everything needs a token, but if there is a token rational reason to be there, it can make a lot of sense. Global payments, stable coins. I think people need to understand the value of a stable coin. Like I'm able to take $1 on chain with a non-flex variable price, which means I can have a global market with like Tether, for example, backed by the US treasuries, which are the best debt in the world. And I can have $1 transfer for cents around the world and not get that money eaten up by bank fees and transfer fees. And more and more projects, like I saw LilyPad, which is like a GPU service, which is here. One of the founders is here in Australia as well. And they support crypto payments. So I can stay in that entire low cost mechanism where I take like a fee and then I can like pay for my AI compute and I can all stay on chain. And then I'm not getting like eaten alive by banks, because I think banks have been very extractive. And have been like a real limit. Like I don't know about you, but I don't know any sort of business people who are able to get like a loan. If you want to buy a house in Australia, that's a different matter. But if you actually want to deploy that into productive use in the economy by creating jobs and products, it's just not going to happen. But bricks and mortar, you can have as much money as you want. And I think that's broken. And I believe like alternatives to the banking system unlock us to do global from day one. Like we used to say that in Web 2. But it was much harder. And then it was like credit cards and then credit card fees and banking fees and minimum. But today you can create a smart contract. You can get it audited. I do recommend you get stuff audited. Not because you're a bad developer, but because you get stuck in like the solution mode, right? Where A happens, B happens, and C happens. And it's a different type of thinking to be like, well, what if someone does something you weren't expecting? Okay. And I always get annoyed when I get like an issue back from an auditor, but it has happened where I haven't considered a scenario. So for example, I had something that was tied to like an NFT. And then the audit came back and says, well, I can access that value and then just pass that back like a bus pass to the person behind me, and they can get that value. So now that one sort of ticket has been used twice. And it's like, I had not considered that, okay? So there are some great auditing firms, different prices, different badges, they're used for different stuff. But with the immutability of code, like being the core financial part, you can change the website, you can change, your subgraphs, that sort of stuff. But that part of getting that right makes a lot of sense, because, there's been a lot of rugs, there's been a lot of security issues, and they would be mitigated significantly. At least use an AI auditor. That would be my recommendation.
How do you choose which chain to build on?
To me, it depends heavily on what you're trying to do, right? So there are strategies there are people that deploy large amounts of grants, for example, like new layer 2s, layer 1s, and they have like honeypot programs to try to get them to go. But and they can give you early stage funding, which can be very beneficial for you to pay for an audit, get stuff done. But you need to understand the risk of some of those selections. Think of it like planets in the solar system, right? You may have a busy planet You may have a small planet, and if it's a brand new sort of place that's not been colonized, it's a new planet, you may be able to go into that's going to be the next big thing and get prime position in a new chain. But your success is dependent on the success of the planet, of their ability to build an ecosystem and to build a thriving community. Okay, now it may be specialized, which is could be very beneficial, but you need to understand you're like a pioneer in the frontier going to a new land, and you hope that boats loads of people or spaceships loads more people come. So I say that is a high risk, but if you're just starting out and you need the capital, it's still a very valid way to like build a product. A lot of chains have got the ability to like move code. Like Solidity is still the largest programming language, and then Rust is the programming language for Solidity, or sorry, for Solana.
And Solidity is the Ethereum language.
It's the Ethereum one, yeah. And like it was based on JavaScript to a certain degree. JavaScript's also a bad language. But it is still the most dominant language on the planet, being JavaScript, TypeScript, if you want to use it with some guardrails. So Solidity is, like, from an employment perspective, probably the number one to do. But Solana and Rust is a fantastic language. They have some really interesting high speed of transaction, right? So Ethereum has got a slower speed of transaction, basis like 2-3 seconds. So if you need something that's really fast or like closes on a moment, then you sort of need to choose those for technical reasons. And then you've got like business reasons as well. And it's like a trade-off. So I wouldn't say it's a yes or a no. Think about, like, if I go to set up in the US, it's the biggest country, okay? I might want to go put my store in Times Square, but it's very expensive to get into Times Square. I have to like pay a lot of marketing costs to like push my brand and stuff in. So that may be economically not viable for me, but I might be able to be on the outskirts of New York and still be able to like have a large customer base. What you also find is like segmentation of customers. So like Ethereum still has a lot of DeFi, right? And economic DeFi has been very large. And I still think like that part is one of the core values of Ethereum. Like they've tried social networks, they've tried some other stuff. Like I was a big NFT fan as well, but sort of the markets have burned itself out. But those, if I was doing a finance product and I was looking for like corporate adoption, then the length of history of like Bitcoin and then Ethereum, Bitcoin's just way too hard to sort of build anything for. And the layer twos are like unclear of who's going to be the dominant player. Where you also have that problem on Ethereum where you've got like your base layer being Ethereum, which then got very expensive. It's much cheaper now. And then you've got a fragmentation over the layer twos, right? And there's so many layer twos. There's a great website called A Layer 2 Beat that shows you the liquidity in each chain, so you can make those trade-offs to be like, can I bring people here, or is this a specialist one, or where is the largest amounts of capital? And that capital will give you an idea of people, right? Because everyone can sort of spin up a wallet and pretty quickly, but how much capital is actually on that chain? That might tell you that people might be interested in something. But like, I wouldn't necessarily launch like a consumer-facing application on mainnet Ethereum. But if I was looking something that was more a consumer-focused, I would look at the larger chains. Base, for example, on Ethereum. I'd look at Solana, and I'd be trying to make those trade-offs because they, to me, are very interesting trade-offs. Like Solana has got a very Web2 startup-y feel to it. They've done a great job. I used to run some of the Solana events as well. Went to the conference in Singapore last year. If you're coming and you've got like a Rust background, then I think Solana is the way to go for you. If you've got like a JavaScripty background, you might want to look at Solidity, but I still think it's going to be heavily financed. And it's almost like moving into the adoption phase of not a retail purchaser, but more corporate purchasers, ETFs, banks, that sort of stuff. So I think there's no right or wrong answer, but if you boil it down to what's my type of customer, right, for my product, and am I a mass use product or am I like a niche use product? Because I might be able to pull those people on chain. There's some really good products like Lo-Fi and some other that sort of abstract chains now, and so you can purchase in one and they'll automatically bridge. I think like the choice of chain might start to decrease in importance, but I also find that they're still tribalistic. So going across multi-chains isn't necessarily as good for an adoption as going single chain, because you can activate the holder base and sort of like the fervent sort of users. I joke that every good chain is a bit of a cult because you're so passionate about your own chain. I do like to float around. Like I still have Solana, Bitcoin, and Ethereum personally. And I think that they're the dominant sort of ones. Like Bitcoin's, I believe, gonna do well with traditional finance flows that come into it. It's simple for them to understand. I think Solana, struggles a little bit, Ethereum struggles a little bit because of the perceived fragmentation, that they don't really understand it. And that is still a builder problem as well. But like Solana is a singular chain, so it's a much easier thing to grab your head around. And I think they've done really well with their super teams. They've done really well with their onboarding, their hackathons. I've participated in some of those. So like if I just wanted to build something like just for people that's a bit gamified, sort of lighthearted, then Solana might be something that I would consider. But like I'm currently building a product at the moment, and I'm probably going to launch that on Ethereum. And even though it's still like consumer faced, it'll probably go on a layer 2. One point I would make is there's new chains coming. You've got Mega ETH, you've got Rise, and these might be like competitive to the Solana execution times. They're extremely fast chains. And so some of the stuff where I've had issues in the past where I've had a project that needs to stop at this time. So I have to stop at the block time before it, and then it gets delayed, and then my market is closed, and all of the transactions are just at the end. That selection of Arbitrum was actually painful because it caused me an issue, and Solana would have been a better selection. But with Mega ETH and Rise coming out, those selections might become even harder. I do know some people are also building on Sui, which seems to have a lot of attention. So you can sort of have these, I look at it a little bit like a funnel as well, and like risk from like seed, Series A, Series B, which is like, there's a lot of seed. It comes down to Series A, Series B. So when certain investors hit certain ones, certain chains are like pretty new and they haven't seen a multi-cycle. So like Solana had like a major drawdown, FTX collapsed down to like, $20. And then so it was really got like a hardened community behind it. And then with that rise, back up to what was it, $148 US. Then, there's a lot of people in the community who then feel a wealth effect, and then they're happy to spend on chain. So understanding the economics of the chain. So if like Ethereum, I'm still underwater from a bunch of Ethereum that I bought, and it'll take a long time for it to come back up to, higher than I purchased it. So you find that there's less, those chains have less consumer willingness to spend because they're in the red versus in the green. So there's just some other considerations. I know that I haven't given you like a definitive answer, but the problem is there is no straight answer. It's like case by case, because I do run an advisory and I do give some of this advice, but it's like, what are you trying to build? Who is that customer? And where's the best place for you to find them? And where's the best place for you to scale into? I've seen a lot of people launch on some secondary chains and they've got a great product, but it's crickets because the chain itself hasn't been able to bring enough people on chain. And it's extremely hard to get people on chain. People love to buy tokens, but a lot less people are using products.
Yeah, 100%. I think it would be really useful for you to explain how funding rounds work in crypto and what a Series A is, what a Series B is, and how that actually works for real world projects. Yeah,
well, it's not too dissimilar to the previous Web 2 world, right? Where you normally have these rounds of funding, which are normally based on sort of some milestone-y stuff, right? But with crypto and its liquidity, they're normally like significantly reduced. And then you've got your different tiers of investors, basically more like brand recognition, right? So understanding projects that have invested in good projects that have been successful, they generally have a good track record. So you're trying to find those. The types of investors you have is like an angel investor, which is like a high net worth, okay? In Australia, for example, there are sophisticated investor rules. So you need to have, I can't remember what it is off the top, like $5 million in assets or an income of over $250,000 to qualify as a sophisticated investor. So if I was in a Web 2 investor, I would need to only speak to these people. And this is part of the gatekeeping that I really don't like. Now, I was a fan of ICOs, but the problem with ICOs is people were overfunded at the start. And so you've got all this money in the bank. There's no reason for you to actually deliver the product because I've already got my payday here. And what you find is a lot of people raise a lot of money, burnt all that money inefficiently, and then just sort of given up and sort of raided it and left because there was no sort of control mechanisms over the top. So in a funding round, what normally happens is we get a certain amount of money to get us to a next stage. And then we have to prove, things to get to the next stage of investment, which is like a different quantum of size, right? An angel is normally somebody who's deploying capital. In crypto, there are platforms like Party.app, there are Pump.fund, that's open up to the full community. So you can put money in. Now, some of them have got like locked up periods. Some of them are fully liquid, like a meme coin, it's got a bonding curve where you can like buy and sell straight away. Like, I like those things because I like the ability for you, because I'm more of a libertarian, that you have the ability to spend your money that you earn in any way that you want, and don't think that you should be protected so that you get access to these higher return opportunities rather than just being locked into just housing, right? Because at the minute you get no return on your capital, and your capital basically gets eaten away through inflation, and you get sort of locked out of the high value opportunities. So I just want to say that, but it's high risk, right? You need to understand you're probably going to lose your money. And this is where the ABC comes in, where the people at the start have got the highest risk with the highest return. And it's lower risk as it moves through these stages of growth and execution, but lower return. But then normally people put in a larger amount of capital. So if you go back to like Web 2 days, an angel group, which are normally in every major city, they have angel networks. The average check size from an angel is like $5,000. And then they go into like a syndicate managed by the angel group. You might get money from like Brisbane Angels, Gold Coast Angels, and different ones. And they'll come together to give you like your angel round. In crypto, you can do that with like issuing NFTs, issuing like a sort of curve, a bonding curve, which is like a meme coin launch, or you can do like a traditional trying to raise some capital. So I know some friends use Party.app, for example, which brought in some capital, and then they were issued tokens in the future. In normal land, you've got what we call, we came out of like San Francisco, a simple agreement for future equity, which is like a convertible debt. In crypto, you've got a SAFT, which is a simple agreement for future tokens, because the value of these companies is pushed out to the token. So the entity of the equity is not necessarily where the value sits. So the structure of the investment normally sits on the token, and you basically get like a promise of releasing tokens in the future at like an increased value. And then you have your Series A investor, your Series B investor, and Series C. They normally deploy different sizes of checks, and they want you to do different stuff. So an angel, you can sort of, if you've got a track record, you can sort of sell them on an idea or an evening, a hackathon. You get a lot of hackathons that have done something cool, and then they make it some angel funding. They get to build out that product, but they haven't necessarily reached market yet, and they may go to like an investment group or in a Series A seed investor. The terms blur. They used to be like distinct with funding numbers, but they sort of like touch each other. So there's no clear separation. There's just a amorphous sort of check size, right? So if you're talking like 500,000, $1 million is very much in the like groups of angels. You've got platforms like Echo from Kobe that allows like Kian from Synthetics, for example, runs a syndicate through there, and then it's a bunch of angels coming together, which is a lot more structured rather than a sort of like platform launch where you're bringing like your own activated communities. And then from that, they'll get like a valuation on it, a discount on a token at the token when it goes to get launched. Then you might build out your product. So then you've got a product which looks really good. And then you might raise money from the next Series A, which is like your go-to-market, how I'm going to do the release, how I'm going to do the marketing, how am I going to get customers in to use these products? Because at the end of the day, you still have like a core thing, right? You've got like your core service or offering, might be intellectual property, might be content, might be, a trading system, could be any of those. And then you almost have a second product, which is like your token or your equity. And they're almost unrelated businesses, but, and people want to be like in the first thing or in the other thing, right? So the angel-y stuff comes from idea, show me some prototypes. Let me see the jigsaw pieces. Okay, I see the picture. I will back you and your team. And you start to build the team. You're starting to like not have to do it on evenings and weekends. You can start to like, give up your job or hire some contractors to help you do it. Get to your Series A where you've got like more of a fully fleshed product. You can see the flow. People like, okay, yep. And you're like, I need to now raise money. And then you also need to say what you're going to do with that money. So you have a budget. So say like, I'm going to spend this money on marketing. We're going to go to all the conferences. We need to raise our profile. We want to do a token launch, but no one knows who we are yet. So we need to raise our profile before launching into a market so that we're not launching into a market and no one knows who we are. So then you won't have any buyers and the price might sort of fall down as people lose faith. And then you have things like exchanges, and exchanges aren't necessarily cheap to launch on. So you get sort of like the funding of these groups as things like a game where you run out of time, like a racing game where you have to hit like a checkpoint, and a lot of people don't hit those checkpoints. And then you get a new injection of capital, which then drives you down until you get your full public launch, your tokens in market, and then you move to more like a straight IPO company where you're driven on the perception of success of the company and on utility. Because I do see some people with great products, but they have not nailed the go-to-market in any way, or the brand, or the messaging in. Like if you go to like a traditional stock market, what is price to earnings ratio, and why is it higher for this type of company than that type of company, right? They're pricing in future value of growth. So people understanding the vision that you're bringing to market, and then your product is just your view version 1, is like an important part of how this works. And I think like there's a lot of lessons in just standard business. To me, Web3 is just global business, right? It's not any different. It is understanding the economic incentives and the buyer's interests to make sure that they're aligned, and trying to build products that match the audience of funders and the audience of purchasers. And that's that sort of like, I wouldn't necessarily launch like a sushi restaurant in the middle of the country in cattle land, you know what I mean? Because I'm unsure that the buyer for a fine dining sea restaurant in a very regional time with very low density of people will be enough to sustain the business. So that like those thought processes of just rationalizing, is this product, is the buyer there, is this a growth business that can get bigger and bigger and bigger, is something that I think is a big thing. I love DEXs. I love the fact that you can launch your own token and you can get your community supporters. So there are different classes of businesses. So if you go to like a standard VC, most of them will say like, how's this going to be $1 billion, right? So they have what we call the portfolio theory. So out of 20 investments, they expect one investment to make all of their returns, right? Like to pay out the fund. They expect another one or two to, have a nice 5x or something like that. And they expect a bunch of failures, okay? But so you need to be like of a large enough value for them to be deploying the money to have a big enough opportunity. But if you're like a really micro niche business, you need to just, play the game, the size, the quantum of the opportunity properly, because you can't go and say, I'm going to raise $1 billion to sell a very niche product in the market, because there's not that market demand. But that might be where you use community funding to build something for that niche community, and that can still be profitable, that can still generate enough revenue. But like VC isn't the path for everything. And it's sort of like, is it novel? Is it unique? That gets a lot more attention. If you're like a Me Too product, like there's an existing 3 or 4 or 5 of them, it will be very difficult for you to raise capital, because a lot of the rewards go to the first couple of people. It's sort of like a winner takes all market in crypto, because it's very low effort to move. Or you might also, the other option just around DCs, which you might, if you want to get into the market and you are a bit of a Me Too product, is look at like a secondary chain, like a layer 2 or another layer 1, and say that I will bring this type of solution which added value to this chain to your chain, and you're missing that. And that's sort of like a beneficial for like the grant program. And then that might be a stepping stone where you as the product team launch your first product, get some revenue through the door, build up your team, and then launch your next product into another one. So I'm not against any of those. It's sort of like all of them are equal options, but they all have pros and cons and limiting. Some of them are like cul-de-sac decisions where you can like, it's a dead end at the end. And other are like you're trying to build a highway, but there's never going to be anyone coming. So then you've overspent or you've overgenerated. So sorry I've sort of went on about that, but I think it's an important part for people to really understand that market dynamics. And retail is still a large buyer of early stuff. So branding, positioning is almost as important as the core product itself. Back in like 2017 and 18, you just had to build a nice product and the tech would sort of win out. But because of the explosion of tokens and L1s and L2s, you've got like a real liquidity split. So you really have to get attention or sort of focus on community and sort of build community and attention like for your token almost as like a second business stream from the core product. And I think that that's the big bit. Like in Web 2, you don't have to do, but in Web 3, you sort of do have to do.
Let's finish with some inspiration. What should young Aussies be looking to build in crypto right now?
I believe crypto is going to be the future of finance. I think the banking sector is, if you've ever worked in it, a lot of it's ancient, it's old tech. So I think like everything's coming on chain. I think it's just a natural progression. So, you know, as they say in America, go to where the puck's going to be, not where the puck already was. So, and I think that you'll find lots and more corporates will move across. There's like one thing about Ethereum scaling, which a lot of people see as like a misstep, is I'm very pleased, just so while we're on Ethereum, that they're sort of pivoting back to trying to like increase layer one. But if you look back at the internet, you had intranets and internets, right? So having layer twos might actually bring like the corporates through where the consumer sits on like the open internet. So I still think that Ethereum is still very large, and it's had a hated drop in price. So you know, I'm not saying it's going to do better than Solana, but I just mean that it's had like a major drawdown. Solana is still very high up. I would just say build something on one of those chains, right? Sui seems hot, but like it's only first cycle, really. It's really hard to know if it's going to like be there and am I building something like foundational on a long-term success, or is this a short-term thing? But like also you don't have to like build it. You can be anon. You can just, you know, get your stuff up and running and just get it going.
Actually, on Ethereum, the Pectra upgrade went live today. Do you have any quick thoughts on Pectra before we wrap up?
I think there was supposed to be this EOF object contract thing that they pulled out, which I'm very pleased that they did because the tooling doesn't really support it just yet. I think that one of the things that Ethereum as a home staker in particular was an issue was the stepping. So you had like 32 ETH to do a validator. Ethereum's still the most decentralized network in the world, right? Like a Solana, for example, you need a data center entry. It's very expensive to run one. So I love that is there. But for home staking in particular, the fact that they have now recognized all of the money that's in it, because you've been punished because of all the liquid staking tokens that you can get yield. So I'm very pleased to see that cap is now lifted. So you have 32 Ethereum, you earn an Ethereum. That one Ethereum is just sitting there dead. So you have to like pull it out. And you would have to wait till you had another 32. You have 64 Ethereum to create your next node. That will reduce the number of active nodes because now I can just have one node with 64 instead of two nodes with 32 each, which will reduce some of the cross communication and clear up some of the chain, because consensus through lots of people, think about it, if I talk to 70 people, that's harder than I talk to 30 people. So I think the economic security staying where it is, because I think that staking was a lot more popular than people thought, has got some issues, but I'm very pleased to see that they're coming out. I think that the roadmap of increasing layer one is there, is going to be good because people want a speedy chain. And the speed of Ethereum as a foundation to do these updates has been a bit slow, very academically focused. And I'm like a practical startup builder guy. So Solana has really like taken my interest. And I'm very pleased to see that Ethereum are sort of responding to that with new changes in the Ethereum foundation. But there's still like a large economic value in there, and it's still been around a long time. So that they're the two big players for me, you know. And I recommend doing both. Like I've done both because I think there's something to that. I'm like a polymath on multiple coding languages, and I find that I learn something from each one. So I'd say like play with products on chain And if I'm going to build something, use those different products, use those different chains, and see what works well, what's good about it and what's bad about it, so that you can improve your products and your chains as well. Rather than putting blinkers on, which I think Ethereum did for a while there, and said, this is what we're doing, they haven't learned those lessons from other people. And I think that that's coming through. And I think seeing the speed of those adoptions, and seeing the energy at the ETH DevCon in Thailand last year was really good. Like the Solana conference and builders, it was great, but I felt like we had too much focus on infrastructure in Ethereum and not on applications. And I feel like that's coming through. But I might still build something on Solana as well in the future. Like I'm not as maxy, but I'm still a big believer in Ethereum. But I do get the mick taken out of me by Ethereum maxis and Solana maxis and Bitcoin maxis, because they tell me I have to choose, and I say you don't have to choose. You can choose all. We can put the meme in there of the hard taco, soft taco meme, but why not have both? And I would say it gives you a broader experience for a builder to play with the Solana tools. And I do what I consider to be customer research. So I'll go and I'll do DeFi with a couple of dollars, knowing I'm never going to make any money, but I want to try the experiences. I want to try the flows, which makes me understand what's good about them and what's bad about them. So I'd say that they're the big options. And I think the big players aren't going anywhere. The risk is in the new players, right? The brand new things in the market, because they're untested. So I like to think about if it's been through one cycle and it's still going, it's probably going to be around for a long time. Now, which horse is the best horse in the race on an economics? I'm not going to answer that question, but I think that the tide is coming in and all boats will rise. So which one it is, I'm not as worried anymore. I'm just it's all going up, folks. As Raoul Powell says, we may be entering the banana zone for a while. I hope he's right. But I'm passionate that this is a new way of doing stuff. Like I speak at some conferences about trust systems, how we can reduce people and replace them with code, and the introduction of AI, and the speed that AI can do stuff, and the natural sort of verification transactions. To me, they start to really look like a good marriage. So I'm very bullish for cryptocurrency, and it's spectacular to see that there's a big change in government acceptance of crypto. I did a previous DeFi charity project that basically got killed by Gary Gensler several years ago, because all my banking partners in the US ran away. So having that switch from crypto negativity to crypto positivity, which we don't see as much in Australia, but I think we're just a bit of a laggard, and we will see that adoption and sort of mechanisms to do that. So if you're building, I think there's a better opportunity for employment in the future. I don't know which chain's the best one. I just pick whichever one you want at the end of the day, pump your own bags. So if you've got Ethereum, build on Ethereum. If you've got Solana, build on Solana. You increase the tide in the chain that you like when you build and launch on it, okay? Because you're adding economic value, you're burning fees for transactions. So that makes a lot of sense. But in saying that, there are then the counter side, which is this going to be a successful venture, which is more like I'm investing my time here. Will it make a return? And that's when we get back to the empty planet, populated planet, but you can't be seen. So you still die even in a populated planet. And they're the hard questions that are non-definitive in my perspective, but other people may argue on that.
Yeah, well, plenty of alpha there for young builders. Definitely look Darren up if you are building in crypto, and find yourself your local meetup group as well for crypto, for AI, whatever it is. Go and find like-minded people and build cool stuff together. Hey, thanks so much for jumping on, mate. I really appreciate you taking the time.
Always a pleasure, Liam. I'm at Darren Rogan on Twitter, X, and you'll see me talk about ecosystems and so forth. So thank you very much again, Liam, and I can't wait to see what Australians build.
Brilliant. As always, guys, please make sure to like and subscribe. Make sure to tell us who you'd love to have on the show, and we'll make sure to make it happen for you. Otherwise, have a great weekend, Binanceans, and we'll catch you next week. Bye. Please note that this discussion includes insights from non-affiliated third parties and key opinion leaders. Binance provides this platform for informational and educational purposes only and is not responsible for any content or insights provided. This information should not be considered as financial, tax, or investment advice from Binance.